Opendoor soared 13% on Friday as momentum is heating back up. We will cover the latest with Opendoor, including the chart and options change. We'll break down the Stonkcast watch list and some of the latest macro news, including the US-China trade talks getting back on track and how the US might be investing in quantum computing next. Also, we will cover how the Fed is cutting rates despite being above its inflation target. All that and much more on this week's market prep video. As always, if you get value from these videos and you want to help us out with the algorithm, make sure to share with a buddy. Don't forget to like, subscribe, and follow us wherever you listen to podcasts. And now, folks, let's roll. I'm Brandon. Welcome back to Stonkcast, the market show for the average Joe. Whether you're a diamond-handed degenerate or a more conservative swing trader or investor, we've got you covered. If you'd like to support the channel beyond liking and subscribing, make sure to check the links in the description. All right, folks, happy Sunday. I hope everyone has had a fantastic weekend. For all my football fans out there, I hope your team's doing good. As a Colts fan, I, for one, am very, very happy. It is time yet again for the market prep video. We got a lot to get into. The markets had a wild finish on Friday off some key economic data. You also had US-China trade talks seemingly getting back on track. So we're going to get into all that, including some of the Magnificent Seven earnings coming up this next week, and of course the Fed rate decision. But first of all, we got to kick it off with Opendoor, which has really been kind of quiet over the past 2-3 weeks. And Friday got a pretty big breakout, up over 13%, getting a lift from IWM, being the small caps ETF, of course, and also just the overall market getting a lift. So let's jump in right there. So for those on YouTube, this is Think or Swim taking a look at Opendoor's daily chart on a 3-month time frame. And just want to highlight a couple things here, first of all, that I want to point out. So as far as the RSI, the relative strength index for Opendoor, we did see this curl up on Friday, which is fantastic news. On Thursday, the RSI was sitting at 46 and it closed Friday at 54. And again, for those on YouTube, the RSI line is this gray one down here at the bottom. And you can see that we are curling back up now, which is a bullish sign. So that is awesome to see. We've had a big reset on the RSI in general from the high that we had of 1087 back in September, right? We've seen the RSI as high as 82 in recent months on Opendoor, and so that is overbought territory. So to get the RSI to reset down in the 50s is fantastic news and a great opportunity for anyone who's long, anyone who's bullish on Opendoor. So now, as far as how the day actually closed out, it was a pretty impressive up day for Opendoor, considering some of the recent activity that we've seen. And we talked about this on the last episode on the midweek check-in, the fact that we had some resistance sitting at 750 for Opendoor. That is short-term resistance that we were seeing. And on Friday, we blasted right through that. So this was basically the resistance was right in here, right around 750. And really in the first 30 minutes, right out the gate, Opendoor, along with the overall market, really set the precedent for the day and shot up over $1. It got all the way up to $8.39 intraday, just a little bit below the 23% Fibonacci retracement level of $8.44. And that's basically the resistance that we saw intraday, but we did manage to hold majority of the gains intraday. And really the telling sign that this was more than just a one-off green day is when we take a look at the volume. The volume, something I've been talking about over the past couple of weeks, we have been seeing the volume dissipate on Opendoor. I mean, you can visually see if you just go back to October 6th and look at all the days here leading up to Friday, we've seen the volume dissipate and go down, right? Less and less volume, which I've argued is really a bullish indication for Opendoor. I don't really view it as, interest, going away from Opendoor. I view it that, you have less volume on down days or consolidation days. You just have a lot of people that have been sitting on the sidelines, right? You have a lot of people just waiting to see what direction this thing is going to go. And then on Friday, we saw the volume pick back up as we got the breakout above 750. We had volume on Friday, folks, of 207 million compared to Thursday's, which was only 65 million. And we did manage to hit 100% of the 30-day average volume for Opendoor, which is something we haven't done in quite a while. So we did see an uptick in the volume, which really confirms the breakout that we saw. And so we did get the break above 750, which is excellent news. And we did manage to hold the 50-day moving average, which was an area that we touched on Wednesday this previous week, right? And was something I talked about in the midweek check-in. This is an area that, that could be dynamic support, being the 50-day moving average. So the fact that we held that on Wednesday, recovered on Thursday a bit more, getting back above $7, and then on Friday, with the help of some of the overall macro news, economic data that we got, the fact that we were able to get the breakout and get back above the 20-day moving average, this is setting up beautifully, in my opinion. Now, as far as next levels of resistance, things that I'm paying attention to, again, for those on YouTube, this is a descending level of resistance. You had the first touch point being that 1087 high that we had back on September 17th, and then a couple more touch points on October 6th and October 8th, right? And now we are coming to it again. So anytime you have more than 2 touch points, you can draw a trend line there, and we have a descending level right here. So really what I'm looking for on Monday, or even just early next week, right? I want to see that we not only hold above 750, since we've now broken out above that on Friday, but now really the next level is going to be this 23% Fibonacci retracement level, again, of $8.44. The way I drew these Fibonacci levels is very simple. It's just from the low that we had of 50 cents to this 1087 high. If you take a look at the overall chart for the past year, it's just the low to the high. That's it, right? And when you set Fibonacci levels on higher time frames, they tend to be more, constructive, better when it comes to retracement levels and things like that. I wouldn't necessarily recommend putting a Fibonacci retracement on, a 5-minute time frame or anything like that. But when you're putting it on a daily chart, those levels tend to get respected more. And as you can tell, Opendoor has respected the 38% Fibonacci level, and now we are coming up to that 23%. So really what I'm looking for on Opendoor is a break above 844, which just also happens to line up with this descending level of resistance that we got. So really, from a technical standpoint, this could be a major breakout for Opendoor, right? This is setting up beautifully on the charts. Now, is it a guarantee that we're going to get above it? No. There's a chance that we end up just touching it like we did back in, early October, and then we drift back towards that $7 level again. But my hope is that we break above it, and I think the probability, given the volume we saw on Friday, and really just, some of the overall, hype around Opendoor, the fact that it's been dormant for so long, you had a lot of accumulation happening around that $7 price point. You got some new investors involved that we've talked about. So, I would say the probability of it breaking out is higher than not. So that's what I'm looking for this week. And if we get above this descending level of resistance, if we break above 844 being that fib level, I think we have a clean shot back up to resistance of $9.65. So that's what I'm anticipating for this week ahead. And, the thing with Opendoor that, people, they tend to forget, right, is that the following on Opendoor is so massive. I saw so many people, hyped about Beyond Meat. And don't get me wrong, I made money on Beyond Meat as well. But a lot of people have been confusing Beyond Meat with Opendoor, assuming they're the same play, and they really are not. Beyond Meat was very simply a pump and dump, and, we saw that play out, given the fact that it's all the way back down towards, $2 after soaring up to $8, right? Meanwhile, Opendoor has been holding these gains that it's had. Opendoor also had a move from 50 cents up to $10, which is, give or take what we saw Beyond Meat do. But the fact is, that move for Opendoor really happened in July. We're in October now, and we are still holding better than half of those initial gains that we saw. So the fact that Opendoor is holding up well, it doesn't just have a Wall Street Bets community, right? It has a global following, it has a cult following similar to Tesla, Palantir in the early days. Not to mention the fact that, when we talk about Opendoor, you have to remember what is coming up, right? You have a Fed rate decision coming out this upcoming Wednesday, which is going to directly impact Opendoor as it relates to mortgage rates, right? And just the opportunity to potentially refinance some of their debt, right, at a lower rate. So you get the Fed rate cut coming up on Wednesday. And really, we've talked about three key catalysts for Opendoor. The number one catalyst that we had coming up first was some of the data that came out this past week with existing home sales. And that number, folks, came in good. And then you have the Fed rate decision on Wednesday, and then we have earnings on November 6th for Opendoor. So we've already gotten past the first catalyst, which was that existing home sales data that came out this past week. And if we just take a look at that data, the forecast was 4.06 million, and we came in line, which was a beat from the previous month, being 4 million. So we saw an uptick there, which is excellent. The Fed rate decision on Wednesday, we're expecting 25 basis points, and that was further confirmed by the CPI data that was delayed because of the government shutdown that came out on Friday, which showed a slight downtick. And if we take a look at that data, we were expecting CPI to basically come in at 3.1%, and it came in at 3.0%, right? And so based off that, the overall market was up big on Friday because it's essentially just confirming that Fed rate cut decision. And so that's benefiting Opendoor. And then again, earnings on November 6th. So a lot of things are lining up. We've already gotten past one catalyst. We're going to get a second one on Wednesday. We'll see how that impacts Opendoor this week. But I would venture to say the overall market, folks, is going to be very bullish. And that is bullish in and of itself for Opendoor. So if we take a quick peek at the options chain for Opendoor and see what the volume looked like on Friday. So for those who are new here, I love to pay attention to the options chain. It's a great insight into what traders are thinking, where the volume is at, things of that nature. It can be a good indicator on where we might be headed. And here's the thing, when we take a look at the overall volume related to the options chain for Opendoor back on Tuesday, it was 250,000. A couple days later on Thursday, it was 500,000. And we've seen it gradually uptick. And then on Friday, we got back above that million mark. We had just over 1.1 million in total volume for the options chain on Opendoor on Friday. That is excellent, excellent news to see some of that volume and interest returning to Opendoor, which in my opinion just further confirms the fact, that we have a bullish mindset here on the options chain for Opendoor. The put to call ratio was 0.21, folks. You had just under 200,000 puts transacted versus almost 1 million calls. So clearly a bullish bias on the options chain for Opendoor. And if we just take a look at the next monthly expiration, which is November 21st, the call side is littered with open interest. You have 68,000 contracts of open interest at that $10 strike. And just take a look at the volume that happened on Friday. 32,000. That is huge, huge, huge volume there. The next closest number to that is 4,000. So clearly a ton of volume being done at that $10 strike, being a key psychological level for Opendoor. And, one of the things I've been paying attention to is the January 16th, 83 days out, basically just this particular monthly expiration. Because one of the things I noticed is that we have an insane amount of open interest on a far out of the money contract. And really, I want to pay attention to this because it can be a key indicator on, just individuals, institutions, retail investors betting big, right? That there's going to be a massive move in Opendoor. If you take a look at the $21 strike price for Opendoor on that January expiration, folks, the open interest is 53, almost 54,000. That is massive compared to the $10 strike for January, which has 63,000. So the fact that you almost have the same amount of open interest on a $10 strike as you do a $21 strike, far out of the money, right, is very, very telling to me. What I'm going to be paying attention to with this $21 strike open interest is to see if that open interest number grows or if it dissipates, right? We had volume on that particular strike on Friday of 2,500. And so really what I want to see on Monday is if that 2,500 is going to get added to that open interest of 53,000 and just continue to grow it. That could be an indication that majority of the bets being placed there are bullish. If we see that open interest dissipate, that could just be, bears, shorts, people who are betting that Opendoor is going to go down, just simply closing out their positions there. Because remember, open interest doesn't necessarily tell you if that's someone buying a call or selling a call. Selling a call would be a bearish bet. So we don't necessarily know. However, I think it's fair to assume with a put to call ratio of 0.21, overall the direction is very, very bullish as far as the bets on Opendoor. So options chain looks very, very interesting right now for Opendoor. I'm very excited for this week ahead as we close out the month of October, heading into Halloween on Friday. Things could get a little spooky for the bears. That's all I'm saying. We got a nice breakout on Friday. Let's see if we can hold it and begin this next leg up on this journey of Opendoor. Where is this thing headed? Me personally, I could easily see this hitting 15 conservatively by the end of the year. Not financial advice, of course, but we've already heard Eric Jackson say that right now Opendoor should be trading at 30. So that's insane to think about, considering the fact that it's at $8 right now. And don't forget, again, earnings November 6th, which as we get closer, we will cover that. But what is Kaz going to announce, right? We've heard rumors, we've heard speculation about the fact that, there may be a partnership with Robinhood and tokenization of real estate. We've seen Kaz and the CEO for Robinhood on Twitter going back and forth, engaging one another. And a lot of people have been speculating there may be a deal here. We know the company is in a quiet period right now as they gear up for that open house, as they're calling it, their earnings call November 6th. A lot of exciting things ahead, I believe. Very excited to see what Kaz has done. Let's see if they raise guidance. A lot going on. So make sure to, leave a comment for those on YouTube and let me know if you're involved in Opendoor. Let me know what your thoughts are on a $15 price projection by the end of the year. In my opinion, that's kind of where I'm at right now conservatively, but would love to get your take on it. Now let's move on to the Stonkcast watch list. So a couple stocks that we've been paying attention to of late. First of all, Bitfarms. Again, this is a Bitcoin miner. This is a company looking to, get into the AI data center play, right? They have the infrastructure to house all the GPUs. And, it's really an interesting play along with CIFR, along with Iron, right? Which is, a company that Eric Jackson is involved in, the hype man for Opendoor, right? That's some of the other plays that he is in particular. But with Bitfarms, the interesting thing is we had the run up to 660. The RSI had a chance to cool off over the past few days. It was as high as 91, which is insane. And as of right now, the RSI, the relative strength index, is sitting at 57, starting to curl back up. For those on YouTube, you can see here that Bitfarms did manage to find support at the 50% Fibonacci retracement level, right around $3.64. And over the past couple of days, it's been curling back up. It's back above the 20-day moving average, back above the 5-day moving average. Closed out Friday at $4.61, up 10% for the day. And, this is a play that I definitely still like. I got some buddies that, hopped back into positions on Bitfarms after we had, the sell-off from that initial run from basically 250 to 660. And I do think that Bitfarms has legs. I think that the prospect of, some kind of AI deal getting struck by even some of the bigger players, right? Whether it be CIFR, IREN, I think there's a sympathy play argument to be had for Bitfarms, and I could easily see Bitfarms hitting 10 before the end of the year, right? So especially if we continue to melt up, if Bitcoin continues to do well, because again, this is a Bitcoin miner, so it is correlated there. We could see another rally out of Bitfarms. So this is an interesting one to me. Another one we've been paying attention to is Hims and Hers, just simply for the fact that it is insanely shorted, kind of similar to what we saw in Beyond Meat. I'm not sure if it's quite that high. It might be in the realm of 35-40% short interest. Again, that just means people who are betting against Hims and Hers. And when you get a lot of short interest and you get a lot of people buying the stock, that's when you can get some volatile movements to the upside. So, as of right now, taking a look at Hims and Hers, it's kind of been dormant over the past week. It's had a bit of a sell-off from hitting 62, last week, and closed out Friday at $48.78, basically flat on the day, up 0.6%. But it is still above that 200-day moving average. This is one that I would keep a close eye on because once it gets momentum, it can move very quickly. Another one that we have been paying attention to on this show, there's really been a couple of them. I think that Hims and Hers is interesting. You got BTQ, which is another one, and this one closed out Friday at $9.11. I saw somebody post about Sana, which is another, this is a biotech play that Eric Jackson is also involved in and looks great right now on the daily chart, holding above the 5-day moving average. You can see the massive volume and green candle that it had on October 15th when Eric Jackson basically, tweeted about it. But it's currently sitting at $5.59. This is a play that I would be interested in looking at for, some longer dated calls. I believe Eric Jackson tweeted about having $12.50 calls on this that expire in 2028, January of 2028 to be clear. But this is an interesting play. It has a 52-week high of $7.30, but he's essentially betting on the fact that this could be a 100-bagger, right? Similar to Opendoor. This could be a company that gets a deal done, things like that. So that's what we got there. And I think that is about it. Also, Lemonade. This is a disruptor in the insurance realm as it relates to AI services, similar to Opendoor, which is looking to disrupt real estate with AI services. Lemonade does come out with earnings just a couple days before Opendoor does, actually. I believe November 4th is when their earnings comes out. But this is another interesting play, one that I'm currently involved in with some calls that expire in January, I believe. I think I got like an $85 strike, but I am bullish on Lemonade, and it is an interesting play. Currently above the 20-day and 5-day moving average. Looks like we're trying to get back above the 50-day moving average of $53.46. But again, this is another one just to have on your radar. These, all these plays on the Stonkcast watch list, it doesn't necessarily mean they're going to go up tomorrow, right? But, when they set up very nicely. And so these are plays that you want to have on your radar. Bitfarms is an excellent example of that. We called that out when it was 250. And if you got in, you had a ride up to 660. And as I've said before, I was able to fortunately make some good money on Bitfarm. So these are just some of the other plays that we're paying attention to. If you have any other, stocks you're watching that you think are interesting, make sure to, drop a comment, let me know, and I'll check into, adding those to the Stonkcast watch list. All right, let's move on to the major indices. And taking a look at the S&P 500, we closed at a new all-time high on Friday, folks. Just wild. You got a government shutdown that is now the second longest that we've experienced in the market, folks. Does not care. What it cares about really is U.S.-China trade talks, which are seemingly back on track now, as President Trump announced he will be meeting with China this upcoming week. So you had that going. You had the CPI that came in a bit softer than expected on Friday, and the markets rallied off of that, and we hit a new all-time high of 68.07. We did manage to hold this level of support of 66.50 58, which I've been calling out, and you can see that we broke away from that cleanly on Friday with a new all-time high, which is excellent to see. You had the S&P up 0.8%. At one point intraday, it was up over 1%, so that's awesome. And then quick check-in on the tech-heavy NASDAQ via the Qs ETF, also hit a new all-time high on Friday, closing at 617.10. And the Qs were up over 1% on Friday. Quick check-in on small caps via the IWM ETF, and small caps killed it. They were up 1.22% on Friday and getting close to a new all-time high as well. The all-time high is 252.77, and we closed at 249.43, so just about $3 off in IWM from another all-time high. Quick check-in on the VIX. The VIX, folks, this is the most interesting thing to me. Given the fact that we saw the VIX kind of toying around with that $20 level after the initial fears related to the U.S. imposing a 100% tariff slap on China a couple weeks ago. The VIX had not cooled off. It had been hovering around 20, and then we saw a spike to 28 back on October 17th. But on Friday, folks, we saw the VIX drop back down into basically that range between 14 and 16, which is where we've seen the VIX really since the April tariff, scares that we had. So awesome to see the VIX coming off again down to 16. That's excellent, and really just reflects the overall optimism, confidence in the overall market that we are now seeing yet again. All right. Quick check-in on Bitcoin via TradingView, and at time of recording, you got Bitcoin up almost 0.4%, sitting at 111,466. It did manage to find support yet again right around that 107 level, so that's great to see. This is TradingView for any of those out there looking for some new trading software. Great platform. Make sure to check the link in the description, and you can get $15 off. All right, now let's move on to some macro news. So first of all, I want to kick it off with this article from Barron's. Trump boosts stock markets with China talks, reasons to bet on a trade deal. This is not exactly orthodox U.S. trade policy. President Donald Trump is cozying up with China while hitting out at Canada, as this article lays out here from Barron's. But the stock market is getting used to such gyrations and should take the latest developments in its stride. After weeks of anticipation, it was confirmed Trump will meet with China's leader Xi Jinping next Thursday. It's likely that wouldn't be the case unless the framework for a trade deal has been established, although the real negotiations will begin when Treasury Secretary Scott Bessent and his counterpart He Lifeng meet in the next few days. That's good news for stocks, which are dealing with a tariff drag even in an earnings season that has been generally impressive to date. So far, 86% of the 130 S&P 500 companies have reported earnings that topped analyst estimates. However, there are still warnings about import taxes driving up prices, such as from footwear company Deckers Outdoor, which sank on a downbeat sales outlook. There's also always the potential for the U.S.-China deal to be derailed. Just look at Canada. Late Thursday, Trump said he was terminating trade negotiations with the U.S. northern neighbor. The cause? A television advertisement sponsored by the Ontario government featuring former U.S. President Ronald Reagan criticizing tariffs. The fallout is bad news for automakers such as GM and Stellantis, which have enjoyed a quota of tariff-free exports to Canada, even though the stocks haven't reacted much early Friday. So, yes, President Trump did cancel, trade negotiations with Canada late Thursday, and the initial thought from me at least was we're going to see a bloodbath off of this. But surprisingly, the market really did not care too much about that, and is instead focusing on the optimistic side of things, which, as of right now is the fact that you have Trump meeting with China's head of state this upcoming Thursday. And here's the thing, I've talked about this before, just the simple fact that, I don't personally believe that these trade talks have ever been in a state where they're going to fall through. Why? It's because of the fact that the U.S. and China are two of the largest economies in the world. they both rely heavily on each other. If they were not able to get a deal done, that would be mutual destruction on both parts. And I don't think either leader wants that. So I've never really thought personally this is not going to work. And, yeah, you still get, some moments where, things kind of get loud in the room, so to speak, like when Trump announced 100% tariff on China and the market kind of dropped on that news. Yes, the market is sensitive to President Trump's comments regarding China, but at the end of the day, folks, let's be realistic here. Both countries need each other. There's going to get a deal. There's going to be a deal that gets done. It's just a matter of time. That's kind of been my stance, I guess, really since April when President Trump announced reciprocal tariffs. So I don't really think that, this trade deal is in jeopardy of not going through. You just have both sides playing hardball. They're both negotiating. They both want to do what's best for their country, but they both also know that they need each other. So we'll be paying attention to that. Again, they meet on Thursday. So, we will cover an update on that next week on the market prep video and see where we stand. So moving on. All right. This other piece here from Market Watch, how quantum computing could become the next frontier in national security. Imagine a supercomputer millions or trillions of times more powerful than the most advanced technology today, capable of both discovering life-saving drugs and instantly hacking all digital encryption. The quantum technology to achieve all that could arrive in as few as 5 years, some industry players say. It has created an international technological race, and there's a sign the U.S. government may look to increase its bets. The Wall Street Journal reported on Wednesday that the biggest publicly traded quantum firms, D-Wave Quantum Inc., ticker symbol QBTS, Rigetti Computing, ticker symbol RGTI, IonQ Inc., ticker symbol IONQ, and Quantum Computing Inc., ticker symbol QUBT, could soon be recipients of a strategic government investment. The White House has since denied that it is in discussions with quantum companies. Nonetheless, optimism for quantum technology stocks has reignited. Quantum technology is not a new topic of interest for the U.S. government. In 2018, President Donald Trump, then in his first term in office, signed the National Quantum Initiative Act, authorizing $1.2 billion for quantum research and development over 5 years. Under President Joe Biden, the CHIPS and Science Act of 2022 reinforced quantum as an area of critical infrastructure and provided additional funding for quantum technology. So this is very interesting, and these are, companies that I will be, adding to the Stonkcast watch list, especially RGTI, Rigetti. I think that's one I really like, Rigetti Computing. And if you want more of a speculative one, I would say HOLO, which has had some pretty insane runs over the past, a few years. This is not one that the U.S. government will be investing in, to be sure. But it is it's still an interesting play if you're looking for something that's a bit more on the degenerate side. If you want something that has the potential to go up, 200%, HOLO is definitely the one to be involved in. It was up Friday 3.96%, currently trading at $4.46. But Rigetti is a bit more stable play, definitely one that you could see the U.S. government getting invested in, and it's already made a pretty interesting run from lows of $13 over the past 3 months to highs of $58, and is in the process of kind of resetting right now. It was down Friday 1.91%, currently trading at $38.84. RSI sitting at 50 right there, so kind of in a neutral territory. But we've already seen the U.S. government invest in various other industries, right? And so it would not be all that crazy to see President Trump and his administration invest also in quantum as a means of protecting national security. We've already seen it with critical minerals, right? We've already seen it with Intel and some other plays as well. So I could, see a world where, we also invest in quantum computing. That's kind of another frontier that people are looking at right now. But drop a comment, let me know what you think about that. But, usually what ends up happening in recent weeks is, you get these articles out, hey, the U.S. government might do this, and the next week they do, and these stocks soar. So if you have conviction that the U.S. is going to actually invest in quantum, definitely be paying attention to some of these symbols. And there's other ones out there, but these are some of the more, high importance ones that I would be paying attention to. Again, RGTI being one, and then also IONQ. That's another big one, I believe, as well. So that's what we got on that front. And last but not least, let's take a look at this article from also MarketWatch. How can the Fed be cutting interest rates again with inflation running so high? The Federal Reserve is almost universally viewed as on track to cut interest rates next week, despite inflation running at a 3% annual rate in September, well above the Fed's 2% target. What gives? How can the Fed be cutting rates when the rate of inflation hasn't been below the central bank's target since January 2021, over 4.5 years ago? The Fed will announce its rate decision on Wednesday at 2 p.m. Eastern. Fed Chair Jerome Powell will hold a press conference at 2:30 p.m. Like anything with the Fed, the answer is a little complex, but can best be explained by breaking it into pieces. So first of all, as this article lays out, the Fed believes rates at current levels are holding down growth. The first point to remember, economists say, is that the Fed believes its current benchmark interest rate at a range of 4% to 4.25% is so high that it is actually slowing down the U.S. economy. Fed officials have debated how much it is slowing the economy, but they all agree on this basic fact. And so they want to lower rates to, obviously encourage growth and really just that overall GDP number that people pay attention to. Also, keep in mind the labor market is now more worrying than high inflation. The big change to the economy this year has been President Donald Trump's decision to implement widespread tariffs or taxes on imported goods. The Fed has been watching these two conditions, and for much of the year, inflation seemed to be the bigger concern. So keep in mind that the Fed has a dual mandate, again, maximum employment and keeping inflation low, right? Those are their two concerns. And so inflation seemed to be the bigger concern for, most of the year, but this article says there were consistent warnings from economists that the tariffs would cause inflation to surge, but at least so far, inflation from tariffs has been relatively muted. So even though inflation was at 3% in September, it's better that Fed policymakers were worried about the overall job market, which has been soft. We've seen that from a lot of the data coming out lately. So Fed officials now think that any increase from tariffs will be transitory and will fade, putting inflation on a downward path to 2%. While inflation might come in hotter than they expect, they believe that it won't last. At the same time, the U.S. labor market is now much weaker than anyone at the central bank expected at the beginning of the year. And so really that's been at the forefront in recent weeks and recent months, right, for the Federal Reserve protecting the economy as it relates to the job market. And so, yeah, we are above that 2% inflation goal, but the Fed is prioritizing the job market right now by cutting rates. And again, as this article says, basically any inflation from tariffs have not been substantial so far. And at the very least, it is going to be transitory in their opinion, so they don't mind, cutting rates because of that. So that's kind of where we stand right now. Now, keep in mind that the Federal Reserve has not been able to see a lot of key economic data due to the government shutdown. So they're kind of shooting in the dark here, but it does seem, by all accounts, 25 basis point cut is on the table for Wednesday. And then as far as December, because we don't have a rate decision in November, as far as December goes, I think we're looking at another 25 basis points there as well, by all accounts. So very interesting, article here. There's people on both sides of the aisle with, differing opinions, of course, on this, whether or not the Fed should cut rates, whether or not inflation is going to go up or down from here. But listen, the data doesn't lie. And based off of Friday, it does appear that CPI came in a little softer than expected. So we're not really seeing inflation picking up. We're not seeing it go down all that much either, but it did come in under expectations. And that is, what the Fed has to go off of at this point. So that's what we got as far as macro news. Now let's jump into the economic calendar. So, again, from this past week, existing home sales were up. That's good for Opendoor. CPI, which was delayed due to the government shutdown, came out on Friday. And again, came in a little softer than expected, 3.0%. You had S&P Global Manufacturing PMI, which came out pretty good there. Now, as far as next week, the big news, of course, is going to be that federal interest rate decision coming out on Wednesday. And, I mention this every time we get to this point where the Fed is going to be, announcing a rate decision. Keep in mind that the actual decision itself is already baked in, right? Everybody knows we're getting 25 bips on Wednesday, October 29th. What everybody does not know is what Daddy Powell, Jerome Powell, is going to say at 2:30 p.m. Eastern when he has his speech, his prepared remarks. And that's really going to be, in my opinion, what drives the market on Wednesday. So that's what we got coming out on Wednesday. That's going to be the big thing. And GDP is coming out on Thursday, October 30th. That's going to be interesting. And then the Fed's preferred inflation gauge comes out on Friday on Halloween, October 31st, which is going to be core PCE, personal consumption expenditure. So that's going to be coming out on Friday, 8:30 a.m. Eastern time. So that's what we got for the economic calendar. Quick check-in via earningshub.com. For Q3 earnings, which we are in the middle of, we got a ton of earnings coming out next week. Just a few to highlight here. Tuesday before the bell, SoFi, PayPal, UPS. After the close, you're going to get Visa. On Wednesday before the bell, Caterpillar, CVS, Etsy, UBS. I mean, there's a bunch on here. After the close on Wednesday is going to be a very interesting day because you get the Fed rate decision, and then after the close, folks, we are going to get not one, not two, but three of the Magnificent Seven reporting. You're going to get Microsoft. You're going to get Meta. You're going to get Alphabet. So that all comes out on Wednesday. And then on Thursday after the close, you get more Magnificent Seven reporting. You're going to get Amazon. You're going to get Apple, right? So big names. These are companies that hold up the Magnificent Seven. That is about 30% of the S&P 500, I believe. So definitely going to have an impact on the overall market this week, given the fact that you have 5 of the Magnificent Seven reporting. So a lot of earnings here on deck. For those just listening on, podcasts, I mean, there's a ton more on here. Make sure to check out earningshub.com just to see all the earnings coming out this week. If you are an earnings trader, there is a ton of action coming up this week. So definitely be paying attention to that. And then, just one last thing I want to highlight here that I forgot earlier in the show is the 10-year bond yield. Sounds kind of boring, but it is tied to mortgages, which will impact, Opendoor, right? Because typically, a 30-year mortgage is standard, but a lot of people either refinance or sell after about 10 years. So that's why the U.S. 10-year bond yield is typically what we track as it relates to mortgage rates, right? And as of Friday, folks, the 10-year bond yield did crack below 4, currently sitting at 3.997. So once we get that 25 basis point cut on Wednesday, it'll be very interesting to see if the 10-year bond yield goes even lower, and that would have a positive impact then, of course, on, mortgage rates, which is what we want to see, right? Typically, when you look at the Fed fund rate, it impacts short-term yields such as, the 1 year, 2 year, things like that. It doesn't really impact the long side of the bond market being, the 10-year, 30-year. So it'll be interesting to see what happens to the 10-year bond yield on Wednesday when we get that Fed rate decision. And obviously then that'll impact, just overall mortgage rates. So, which of course is important to Opendoor. So that's what I got for you on this market prep video. Thanks so much for all the support. I will be back as always for the midweek check-in on Thursday, 6 a.m. Eastern. Make sure to drop a comment. If you're listening on your favorite podcast platform, make sure to leave a review. It helps out with the algorithm. Again, appreciate all the support. Make sure to like, subscribe. Don't forget to follow us wherever you listen to podcasts. And folks, as always, remember, plan the trade and trade the plan. Have a good one.